Hello, everyone, and welcome back to Financial Market Insights for Traders. I'm Sophia, and today we are going to take a deep dive into the emerging markets outlook for 2026, looking closely at both the risks and the opportunities shaping this space. Now, if you've been following global markets over the past few years, you'll know that emerging markets have gone through a pretty turbulent period. We've had inflation shocks, aggressive rate hikes, geopolitical tensions, and shifting trade dynamics. But what's interesting right now is that we are moving into a new phase. This isn't just a recovery story anymore, it's a structural shift. So let's start with the bigger picture. The global economy is rebalancing. Developed markets are dealing with slower growth, aging populations, and heavy debt burdens. That naturally limits how fast they can expand. At the same time, many emerging markets are in a very different position. They've got younger populations, growing workforces, and increasing productivity. But here's the key point. The story isn't just about growth anymore. It's about transformation. Emerging markets are no longer just exporting cheap labor or raw materials. Many of them are moving up the value chain. They are building out their own manufacturing bases, strengthening domestic consumption, investing in technology, and developing more sophisticated financial systems. That shift is a big reason why the emerging markets outlook for 2026 is attracting so much attention. Now, something else that doesn't get talked about enough is how monetary policy has evolved in these economies. In the past, emerging markets were often reactive. Inflation would rise, currencies would weaken, and central banks would be forced to respond late. But this time, a lot of them moved early. Countries like Brazil and Mexico raised interest rates aggressively before the US Federal Reserve even got started. And that's important because as we move through 2026, we are seeing the benefits of that. Inflation is starting to come down in several key economies. Real interest rates are still relatively attractive, and currency volatility is more contained than it has been in previous cycles. That doesn't mean everything is stable, but it does suggest that some emerging markets are becoming more credible and more predictable. And that's exactly what long-term investors look for. Of course, we can't talk about emerging markets without talking about the US dollar, because like it or not, it still drives a huge part of the story. When the dollar is strong, financial conditions tighten globally. It becomes more expensive for emerging markets to service dollar-denominated debt, and capital tends to flow back into developed markets. On the other hand, when the dollar weakens, it usually supports inflows into emerging economies. So in 2026, there are a few scenarios to watch. If the dollar weakens, that could create a strong tailwind for emerging markets. If it stays relatively stable, we probably see steady, gradual growth. But if it strengthens again, especially unexpectedly, then volatility could return quite quickly. This is why, as a trader, you can't just focus on local fundamentals. You have to keep an eye on global liquidity and currency dynamics as well. Now, another major shift that's shaping opportunities right now is what's happening with global supply chains. We are moving away from a system where production is heavily concentrated in one or two countries. Companies are diversifying. They want resilience, not just efficiency. And that's leading to trends like friendshoring and nearshoring. What that means in practice is that production is being relocated to countries that are either politically aligned or geographically closer to key markets. So you're seeing places like Vietnam and Indonesia gain manufacturing share. Mexico is becoming increasingly important as a hub for North American supply chains. And India is positioning itself as a major alternative manufacturing base. This is one of the most important structural drivers in the emerging markets outlook for 2026. Because it's not a short-term trend. These are long-term capital flows that can reshape entire economies. Now let's talk about technology, because this is where things get really interesting. Emerging markets are not following the same development path as developed economies. In many cases, they are skipping entire stages. Instead of building traditional banking infrastructure, they are going straight to mobile banking. Instead of relying on legacy retail systems, they are jumping straight into e-commerce ecosystems. You see this very clearly in places like Africa, where mobile banking has become dominant, or Southeast Asia, where e-commerce is growing rapidly, or Latin America, where digital payments are becoming the norm. This kind of leapfrogging is a major growth driver. It's not just about convenience. It's fundamentally changing how these economies function, and it's creating scalable opportunities in fintech, telecom, and platform-based business models. Another area that's becoming increasingly important is the global energy transition. Emerging markets have always been closely linked to commodities, but now the focus is shifting. The move toward renewable energy and electrification is driving demand for specific resources like lithium, copper, and nickel. These are essential for electric vehicles, battery storage, and renewable infrastructure. So countries that are rich in these resources have a real opportunity here. But at the same time, they need to manage it carefully. That means having the right regulatory frameworks, investing in infrastructure, and addressing environmental concerns. Not every country will get that balance right. Now, while all of this sounds promising, we also need to talk about the risks because they are very real. One of the biggest concerns is debt. Many emerging markets took on significant debt during the low interest rate environment of the early 2020s. Now that rates are higher, servicing that debt has become more expensive. That creates pressure on government budgets and limits their ability to spend. It also increases vulnerability to external shocks. So when you're looking at opportunities, you really need to pay attention to fiscal discipline. Countries with strong balance sheets are likely to outperform, while those with weaker finances could struggle. Geopolitics is another factor that's becoming more important. Trade tensions, regional conflicts, and shifting alliances can all have a direct impact on markets. So understanding the political landscape is now just as important as understanding the economic one. If we zoom out and look regionally, Asia still stands out as the core of the emerging market story. India, in particular, continues to show strong momentum, driven by domestic demand, infrastructure development, and digital expansion. Southeast Asia is also benefiting from supply chain shifts, with countries like Vietnam and Indonesia gaining traction. Latin America offers a different mix. There's strong potential, especially in commodities and energy, but also a fair amount of volatility, often driven by political uncertainty. Mexico is worth watching closely because of its role in nearshoring. Africa, on the other hand, is often overlooked, but it has significant long-term potential. Rapid population growth, increasing urbanization, and rising mobile adoption are creating new markets, particularly in fintech and consumer sectors. The challenge, as always, is infrastructure and political stability. So when you put all of this together, a few key investment themes stand out. Digital finance is one. Renewable energy and critical minerals is another. Infrastructure development is a big one, and so is consumer growth driven by a rising middle class. But here's the thing. Identifying these themes is only part of the equation. Execution matters just as much. If you're actively trading or investing in these markets, you need the right tools to analyze and act quickly. That's why it's worth taking a look at the Crystal Ball Markets trading platform at crystalballmarkets.com/platform. It's designed to be cutting-edge, user-friendly, and built for modern market conditions, which makes a real difference when you're dealing with fast-moving global trends. And just as important as having the right tools is staying informed. Markets evolve quickly, especially in emerging economies. If you want to build your understanding and keep up with what's happening, I'd recommend checking out the Crystal Ball Markets podcast at iss.com/podcast/crystalballmarkets. It's beginner-friendly, but still insightful, and it covers trading, investing, macro trends, and financial markets in a way that's easy to follow. So to wrap this up, the emerging markets outlook for 2026 is really a story of both opportunity and complexity. On one hand, you've got strong structural drivers like demographics, digital transformation, supply chain shifts, and the energy transition. On the other hand, you've got risks tied to interest rates, the US dollar, debt levels, and geopolitics. The key is to stay selective, stay informed, and stay adaptable. Because at this point, emerging markets are not just an optional part of the global economy. They are a core part of it. Thanks for listening to Financial Market Insights for Traders. I'm Sophia, and I'll catch you in the next episode.